to move on to our next subject, and this is, for Arnie and David, something that you guys are excited about, and I am too, because there's so many condos out there that are undervalued, and they're undervalued and selling for lower prices because the financing obstacles that are presented with those condos. And so imagine if, no matter what product you're selling, if you are selling a product and only a certain amount of people can buy it because of how it has to be paid for, the value is not going to rise like it would if the market was in a better position for it. So that's one of the things, a news release out this week, and I wanted to kind of get you guys' thoughts on it, that FHA is now, changing some rules that should allow more condo buildings to get FHA approval, which would, in fact, increase the ability of people to buy it, and then I think increase prices.
Yeah, this is huge. I mean, because in our area, really, there hasn't been really any opportunity for FHAs on condos specifically. And just because FHA has their different rules, it doesn't work the same as a Fannie Mae loan or whatever. So, what this, and this is brand new information. We're kind of digesting it all everybody as we speak. But what it sounds like is going to be similar to, what Fannie Mae does, in which you get a questionnaire for the condo, make sure that, the budget's in line, make sure that, owner occupancy is okay, and then we can get FHA financing on that, which will be huge because 3.5% down payment.
Right, and that's what a lot of people don't realize, and I still believe that condos are one of the best investment opportunities in Tampa Bay. I'm buying up condos any chance I can get. I mean, we look at distressed condos all the time, and my purpose for buying them is because I think they're artificially devalued right now because so few people have either the 20% down payment that's needed,
or 25
to get rid of.
If you're a big bank, 25%
right,
or more.
Or cash. And so many of those condos, I mean, these are condos that, like in South Tampa, for example, back before the market crash, were worth $200,000 that are now selling for $70,000, when the same comparable single-family homes have recovered in value to back before the bust. The condos are still depressed, and it's because of the small pool of buyers that are able to buy them. It's kept prices down. So I'm a fan of condo investment right now, merely because of this type of stuff not getting through, and hopefully it will make it easier for more people to buy condos with a lower down payment. Because let's face it, condos a lot of times are geared towards a couple of different audiences. First-time home buyers who don't have money, or retirees who want to preserve as much of their capital as they can, and those are the pools
that may bring the millennials out of the woodwork. What do you think, David?
I mean, adding an FHA option to condos in desirable locations, absolutely.
I think so.
Because a lot of the condos right now, they're probably not even Fannie Mae approved. There's, as we've discussed before, there's a lot of non-warrantable options for condos. So. Different.
Yeah, I mean, I think so. People, the layman out there probably say, "Why FHA? Why is that so important?" Well, FHA is more lenient on credit, and a lot of first-time home buyers have some issues with credit. Okay, right. FHA is more. They used to be more lenient on down payment, but now conventional loans have come up and kind of competed with that. So not as much so with that. But basically more lenient on credit, more lenient on having a non-occupant co-borrower, so you can have your parents go on a loan with you, things like that. So
and a lot of people, I think, avoid condos also because the mortgage insurance issue, because they have to put so much down.
And that's gone down.
So even if conventional is competing with FHA on like a single family home because 5% or 3% versus 3.5%, on condos it's a different scenario because even those generally, they're going to require the larger down payment.
And I think financing is a big part of the reason why the condos are depressed right now.
Yeah. I think there's no question. Yeah. And I can look at condos, and one of the things I use as an analysis for our purchases or for investors we represent, I'm looking at it and comparing the condo value now to the condo value of 5, 6, 7 years ago, and then looking at single family homes during that same period, and I'm looking for that math. I'm looking for the places that have been depressed, even though the market around that home is doing great, around that condo is doing great in single family homes. Condo isn't because of financing. Those are the ones I want to buy right now, and obviously that keeps values down because the only people buying them are cash or have large amounts down, and that just shrinks the buyer pool and keeps prices down because you don't have enough demand for the product because people have just eliminated it. And even if and when this does get through, there'll still be a lag because there'll be a period of time where people still think condos can't get financed even when they can. So even once this passes, there's going to be a lag. before it kind of recovers. Just like when our market started recovering and started doing well, there were still people that thought it was in the dumps.
Right.
Because they just had heard so much news about that for years that it took a while for them to finally wake up. And I think when these condo changes go into place, it'll be the same thing.
Are you seeing the more of the foreclosures and short sales that are still out there happening more in condos right now?
Oh yeah.
Yeah.
Oh yeah. Yeah. And again, I think there's a few reasons. Number one, because the associations got involved in the legal side, so the legal process took longer. I think the banks hold on to they don't want to foreclose on them as fast because they know there isn't as much money in them, so they take their time. And then so they're not expecting to be able to put it on the market and sell it quickly. So they kind of drag their feet with getting it through, and let's focus on these single family homes because we know we can turn them over in a week. So it's definitely had an impact across.
So if you're a condo developer out there, I'm going to give you a little inside track here, because here's the situation that has happened. If you try to build a condo projects were like going off the hook. They're going off the shelf back in the day.
Condo conversions. You had apartment buildings getting converted, and then you had people building condos. Yeah.
Left and right. Okay, and then the market crashed. The Great Recession happened, right? And these guys had these condos in place, and they couldn't sell them. So what they do, they started renting them out.
Yep. Okay.
And now the guideline says if one unit owner owns more than 10%, then it doesn't qualify. And the problem is that the condo developer now owns more than 10%. But if you remember correctly, when you first started to sell the condos when they were new construction, you get pre-sale contracts. And so if somebody would get out there and say, hey, I want to convert all these rentals back into purchases, then the strategy would be to create that pre-sale contract marketing again, and then we can get all those homes closed at one time and get you below 10%.
That's it. That's a great idea. Well, and so here's, on that same token, any of the builders and developers, and I had a few minutes with Mr. Vinnick this week, and I know that as some spent some time with him at the Lightning game, we got a bench visit, which was kind of cool. But the interesting thing is with all, not just what he's doing, but all of the developments that are happening in downtown Tampa, all the developments all over Tampa Bay. You have a lot of people building and developing real estate right now. Condos are a part of that. I think the advice to everyone out there, that is involved in any of those type of projects is get the financing squared away immediately. Don't underestimate the importance of getting the association, the budget, all that stuff set up so that it can get the maximum approval from FHA, VA, and Fannie, because a lot of them didn't do that a few years ago, or did it and then didn't get it renewed. Like, I remember when some of those buildings downtown were FHA able, and then they didn't do what they needed to keep doing.
Right.
They didn't kind of keep stuff in line, and then they don't realize, you get someone in some of those associations that's running it that's not a business person or in the real estate business, and they think, oh, we only want people that can put down 20 or 25% in our condo community.
Right.
We want people that have that kind of money, and that's the kind of people we want here. Well, guess what? You just basically someone just dipped into all your people's pockets and took money from them because your values are going to drop.
Right.
Because you're limiting the buyer pool. So, that would be the advice I have to, potential developers. Really own that. Really make sure you hire and partner with lenders.
Just think of the logic. The reason why condo developers are having to rent out their units because they can't move them. The reason why condo values are depressed right now is because financing is a big key. And
it's a big key because condo developers in some of these communities own too great of a percentage of them and turn them into rentals. And now they can't get the financing. So while it sounds all good to think, oh, well, our backup plan is just to rent them, it's going to cripple you for a long time if you own a certain amount of them.
Over 10%.
You're going to have to figure out a better solution for that. And I think as more development happens in our market and we see more builders building and more new construction happening, I think we have to get the word out there. We have to get the education out there to them to make sure they're partnering with lenders that can help take them through that process and do all the things right from the beginning, the right amount of reserves, setting the HOA fees at the right place, all those types of things, selling a certain percentage of them early so you don't own so many. I mean, there's so many different options, and it really is a science to get a building approved by.
It is
not simple. You can't just pick up the phone and call them and say, here's my stuff, Fannie, Freddie, can you approve me? There's a science to it. You have to partner with people that know what they're doing.
And if you're an HOA right now, one of the things they say, well, we have enough money in the budget, so we're not creating reserves. We have enough money in the budget. Well, if your budget's not 10% of the income coming in, then you have a problem, then you have to have an exception, so.
And that's what they don't realize, that, and that's the thing that drives me crazy. And I don't have interest in serving on our HOA or on any HOAs. I don't have time for it. But the reality is, a lot of people serving on HOAs aren't up to date on what's going on in real estate. And they're making decisions about the
They don't
financials
know what's going on.
in their HOA that impact the ability to sell units in that community and will harm their ability to get financing, which ipso facto leads to losing value for their homes in their community because they made bad financial decisions in the HOA. So we're going to continue this conversation. Also trying to jump off my podium. I'm passionate about this because I see it. I can't tell you how often I see things, and it's like, why in the world did the HOA do that? That's the dumbest thing they could have done because they're making decisions that aren't based on how it could affect the real estate value. So we'll be back after a quick break here on 970 WFLA.